Good morning. Today, we're going to talk about SpaceX. Is it a good investment or is it a dog with fleas? And we're going to explore that right now. So, first of all, SpaceX is your typical Wall Street game that turns your money and their experience into their money and your experience. So, I don't think that's what you want to see happen. SpaceX IPO'd yesterday at 135, it opened at 150, and it closed at 160.95. That's an over $2 trillion valuation. You know why they priced it to have about a $2 trillion valuation? Because Elon Musk wanted to be a trillionaire. I think that's the only reason. So let me get into some details before I explain why it's a bad investment. There's three businesses to SpaceX. Starlink, which is a very good, profitable company, growth potential, but not $2 trillion worth of growth potential. I think we all know Starlink has the satellites for internet use and stuff like that. It's a very good product, it's growing, it's making money, so good on them. The other business is reusable rockets. That is closer to a break-even business with a lot of unknowns in terms of its future. It's been referred to as a GoFundMe by the government for space exploration. Not sure that that's a profitable business. I think we're years away from finding out if it is. So that's too early to tell. And then the third business is X and XAI. And yes, this is definitely the dog with fleas. X has been a problem for Elon since he bought it. And XAI, which is essentially Grok, is also a big problem. Basically, people don't want to use Grok. I mean, everybody's either using Anthropic, Claude, or they're moving, ChatGPT, and that's where the fight is. Gemini, of course, is Google's, and it's got a lot of users because Google has a lot of traction. But Grok is not doing well. I know they're going to release Grok 5, and they're hoping that'll change things, but certainly the existing Grok is not in any demand. Now, the one thing that's boosting their revenues is that Grok or XAI built this huge, massive Colossus data center. And of course, they didn't have any real use for it because people aren't using Grok. So they leased it out to Anthropic. At the time they leased it out, there was only 11% utilization on this massive data center. So it was a money loser for them. Well, Anthropic is paying top dollar for the use of those NVIDIA chips. There's a huge quantity of NVIDIA chips. And they're paying about $8 per GPU hour for those NVIDIA chips, where the market rate for those chips has dropped to around $2 to $3. So these are like the H100s, H200s, which are kind of the workhorses, but they're kind of also the last generation. So they're quickly becoming obsolete and getting replaced by Blackwell and the new iterations. And Anthropic is very quickly building out data centers itself that are going to open in 26 and 27. Some with other people, some with Google, some with Amazon. And they're building out these new, which will have more state-of-the-art chips and everything else. The interesting thing with the contract with XAI is it's a 5-year contract that's paying XAI $1.25 billion per month. Great revenue for them. But there's a 90-day cancellation policy, and you got to think that Anthropic can't wait to stop overpaying by 4 times on this compute. So it looks like by the end of the year or early next year, that contract's going to be totally gone. And that's going to go from a big profit center to a big loss center for them. So That's on top of the fact that Grok is losing copious amounts of money. So the whole SpaceX as an enterprise is losing money, but Grok is the center of that, and probably there's going to be more losses to come. Now, I also want to explain to you that what they're doing here with this IPO is a bit of a game, a bit of a shell game, a bit of a Ponzi scheme, in fact. So what they do is they issue a low float. So only 4% of the shares are floating. So let me draw you an analogy. Let's say I start Emil Inc. and I issue 1 billion shares to me and 10 shares to the public. And I sell those 10 shares to people who I know won't sell them. So there's going to be upside pressure. And then I spin a nice narrative. Oh, we're gonna send people to the sun. Yeah, we have some physics problems with that, but we're gonna overcome them. Promise you. So we have this nice narrative, and some people buy into that narrative, and they start bidding up those 10 shares. So it's $100. But I have 1 billion shares, so my shares are worth $100 billion. And because there's only 10 shares trading, there's not much chance for it to go down. So that's a little Ponzi scheme. Now I got $100 billion. I can use that as collateral. I can use that to borrow money. I can't sell them, because if I sell them, the whole house of cards goes to zero. But I can do that. Now what I need, as in any Ponzi scheme or any pump and dump scheme, what I need is new liquidity to come in so I can sell my shares. So what's that new liquidity? Well, we get put in the S&P 500, we get put in the NASDAQ, all of a sudden we're in all the ETFs, all of a sudden we're in everybody's pension fund. By definition, they have to be if they're in the index. And all of a sudden you have all these forced buyers coming in, and there's your exit liquidity. So it's the classic pump and dump scheme where, you know, the rogue brokers try to buy a bunch of shares, then try to sell them out to the public. And by the time they've unloaded all their shares, they just let it fall to pieces. So that's essentially what's going on here. And I wouldn't get caught up in it. Also, hot IPOs are generally not a good investment and tend to do poorly or go down in price. Even Saudi Aramco, which was the last biggest IPO of all time, after its IPO hasn't gone up in 7 years. So, you know, obviously not a good investment. So again, with SpaceX, I would stay away. This is a Wall Street game. Don't get caught up in it. Try to find something with real value or real growth.